Hong Kong crypto regulation. Potential framework for regulation of virtual asset platform operators. Currently, none of the cryptocurrency exchanges operating in Hong Kong are licensed by the SFC. The SFC has written to exchanges, warning them not to trade virtual assets, which are securities, but has not named the relevant virtual assets, or clarified why it considered them to be securities. Generally, cryptocurrencies are regarded as virtual commodities, and thus outside the scope of the regulatory ambit of the Hong Kong Monetary Authority, which supervises banks, the SFC, which regulates the securities and futures industry, the Hong Kong Customs and Excise Department, which regulates money service operators, i.e. a currency exchange, or money remittance service provider. Recognizing its lack of jurisdiction over exchanges, which solely trade non-SF virtual assets, the SFC is offering exchanges the chance to become licensed, in order to be able to set themselves apart from unlicensed exchanges, if they trade at least one virtual asset, which is a security. The SFC is proposing to regulate all activities of a crypto exchange, including those relating to virtual assets, that are not securities, on the basis that the trading of one, or more, security virtual assets, brings the exchange within its regulatory jurisdiction. The SFC refers to this as an opt-in regime. The SFC is envisaging a staged approach comprising an initial exploratory phase. Platform operators would not be licensed at this stage. The SFC would discuss with platform operators its expected standards of regulation, observe their live operations, and assess whether platform operators are appropriate for regulation by the SFC, based on the performance of those trading in the sandbox. To avoid public confusion about platform operators' regulatory status, the SFC will keep sandbox applicants' identity confidential. At the end of the exploratory stage, the SFC may decide not to regulate platform operators. If, however, it determines that they are appropriate to be regulated, it will consider granting licenses for Type 1, dealing in securities, and Type 7, providing automated trading services, to platform operators, subject to stipulated licensing conditions. The platform operator will then move to the second stage of the sandbox, when it will need to put in place robust internal controls, and will be subject to closer SFC supervision. After 12 months, the platform operator will be able to apply for removal of some of the licensing conditions, for example on ongoing reporting obligations, and exit the sandbox. According to the conceptual framework for the potential regulation of virtual asset trading platform operators, conceptual framework, if a platform operator is interested in becoming licensed, it must operate an online trading platform in Hong Kong, offer trading of at least one virtual asset that constitutes a security under the SFO, and provide trading, clearing, and settlement services for virtual assets, and have control of investors' assets. These basic requirements raise a number of issues. 1. It is not clear at what stage the platform operator needs to offer trading in a virtual asset which is a security. Is this a requirement for entering the sandbox and starting the exploratory stage, or only for the grant of a license? The latter interpretation makes more sense, given that the licensing obligation would be triggered once a platform provides trading for a virtual asset, which is a security. 2. It is unclear which virtual assets will qualify as securities. The SFC has said that most virtual assets fall outside the scope of the definition, but has not provided any explanation for that view. To be a security, a virtual asset would need to have the features of shares, debentures, a collective investment scheme, structured product, or regulated investment agreement. In some cases, it may be fairly obvious, for example, where a virtual asset entitles the holder to a share of the issuer's profit, making it similar to a share, or where the issuer will invest the token proceeds, and distribute a share of the return on investment to holders, making it a collective investment scheme. Yet there will be many virtual assets where the position is uncertain. In the UK, a report of the Crypto Assets Task Force in October 2018 noted that the complexity and opacity of many virtual assets make it difficult to determine whether they qualify as security tokens. Given that many platforms are available online, the scope of the requirement that the exchange operates in Hong Kong needs clarification. Given that the framework proposed is entirely voluntary, and the SFC may decide at the end of the exploratory phase not to license crypto exchanges, it is difficult to see how Hong Kong is intending to comply with the Financial Action Task Force's latest recommendation. Possibly the intention is to indicate to the Financial Action Task Force that Hong Kong is doing something. Moreover, the licensing conditions and regulatory standards the SFC is proposing may prove unattractive for exchanges. Proposed licensing conditions. If the SFC grants a license to a qualified platform operator, it will impose licensing conditions, which are likely to include the following core principles. 1. Services must be provided only to professional investors. The SFC will require platforms to limit trading activities to professional investors only. For individuals, this will require them to have a portfolio of cash and securities of at least 8 million Hong Kong dollars. The restriction on retail customers may put off platforms which currently cater for retail clients. The move could also be criticized for disenfranchising retail investors. All virtual asset trading activities must be conducted under a single legal entity. All virtual asset trading activities conducted by the platform operators group, which are a. conducted in Hong Kong, or b. actively marketed to Hong Kong investors, will need to be carried out by a single SFC licensed entity. Virtual asset trading activities include all virtual asset trading activities on and off the platform, and any activities that are wholly incidental to the provision of trading services. The SFC notes, in the conceptual framework, that it will not license virtual asset trading platforms that only provide a direct peer-to-peer marketplace for investors, who retain control over their own assets, whether fiat currencies or virtual assets. It is not clear therefore, whether the SFC would allow operations to be split between those which the SFC is prepared to license, and those it is not. 3. Transactions must be pre-funded, and no leverage, or virtual asset-related futures contracts, or other derivatives are allowed. Platform operators will only be allowed to execute a trade for a client, if there are sufficient fiat currencies, or virtual assets in the client's account with the platform, to cover the trade. Platform operators will be prohibited from providing financial accommodation for clients to acquire virtual assets. No trading of virtual assets, which are futures contracts, or other derivatives is allowed. The limitation on providing margin financing could act as a deterrent. 4. Prohibition on trading ICO tokens in initial 12 months. A virtual asset issued, by way of an initial coin offering, ICO, will only be acceptable for trading at least 12 months after completion of the ICO, or when the ICO project has begun to generate profit, whichever is earlier. Ongoing regulatory standards. If a platform operator is granted a license, it will be required to comply with the SFO and its subsidiary legislation, as well as the Code of Conduct for persons licensed by, or registered with the SFC, Code of Conduct, and other codes, and guidelines issued by the SFC. In particular, licensed platform operators would need to comply with Know Your Client procedures under paragraph 5.1 and the suitability requirement under paragraph 5.2 of the Code of Conduct, as well as the guideline on anti-money laundering and counter-financing of terrorism. The SFC has also set out terms and conditions that would generally apply to licensed platform operators, although these will be subject to variation, depending on a platform operator's particular business nature, size and model, and the outcome of discussions with the SFC. Financial resources. Platform operators will need to assess whether they are able to meet the financial qualification requirements to be licensed as a securities dealer and provider of automated trading services. A platform operator will need minimum paid-up share capital of 5 million Hong Kong dollars and minimum liquid capital of 3 million Hong Kong dollars under the Securities and Futures Financial Resources rules. The SFC may additionally require, on a case-by-case basis, platform operators to maintain a reserve equivalent to 12 months of operating expenses, to cushion them against risks of theft and hacking. Know your client, anti-money laundering and counter-terrorist financing obligations. As licensed entities, platform operators would be required to perform Know Your Client, anti-money laundering, and counter-terrorist financing procedures. They will also have to comply with the suitability requirement, i.e. ensure that any recommendation or solicitation made to clients with regard to virtual assets is suitable, having regard to the information about the client, of which they are, or should be aware through due diligence. Exemptions from this requirement are available for institutional professional investors, and, subject to performing certain procedures, corporate professional investors. With regard to anti-money laundering and counter-terrorist financing, the SFC highlights in its regulatory statement that platform operators' inability to comply with requirements on anti-money laundering and counter-terrorist financing, due to the anonymity of blockchain transactions, may be a reason why the SFC ultimately determines that platform operators are not suitable for licensing. It states, the SFC is not certain at this stage whether platform operators would satisfy the expected anti-money laundering standards, given that anonymity is the core feature of blockchain, the underlying technology of virtual assets. Many exchanges are already voluntarily adopting Know Your Client and anti-money laundering procedures. However, the conceptual framework would impose additional detailed obligations in relation to Know Your Client and anti-money laundering, including requirements to a. Conduct all deposits and withdrawals of fiat currencies for a client's account through a designated bank account opened in the client's name with an authorized financial institution in Hong Kong or other jurisdictions agreed by the SFC. b. Apply enhanced due diligence and ongoing monitoring in specified circumstances, including transactions involving virtual assets with higher risk or greater anonymity, such as virtual assets which mask users' identities or transaction details, and transactions with tainted wallet addresses, such as darknet marketplace transactions. And c. Have systems in place that are able to 3. Knowledge requirement. Except in the case of institutional professional investors, platform operators will be required to assess a client's knowledge of virtual assets, including risks associated with virtual assets, prior to provision of service. If a client does not have the required knowledge, a platform operator would only be able to provide services to the client, if it would be acting in the client's best interests. This requirement is likely to be problematic for platform operators, since the SFC does not provide guidance as to what will be considered to be sufficient knowledge, or the circumstances in which a trade could be considered to be in a client's best interests. Sufficient knowledge will be particularly difficult to assess, given that virtual assets are a recent phenomenon, and they vary widely. Would experience of trading Bitcoin, for example, be regarded as providing sufficient knowledge for the trading of ICO tokens? The circular to intermediaries distributing virtual asset funds, which also imposes a knowledge assessment obligation on distributors, provides that licensed corporations may take into account a client's prior investment experience in private equity, or venture capital, or whether they have provided capital for a startup business in the previous 2 years. The SFC should confirm whether this would also apply to platform operators' assessment of client knowledge. (4) Due diligence on virtual assets admitted to trading. One of the most onerous obligations to be imposed is the requirement that platform operators perform all reasonable due diligence on virtual assets before listing them. Despite the broad scope of the obligation, the specified areas that platform operators may consider for these purposes are broad and imprecise, and platform operators are likely to experience considerable difficulty in conducting due diligence, for example in relation to the security infrastructure of the blockchain protocol underlying the virtual asset, and whether it may be susceptible to attack by miners controlling more than 50% of the network's mining hash rate, or computing power. The accuracy of the marketing materials, and the requirement that they are not misleading. The demand, supply, maturity and liquidity of the virtual asset. Platform operators will need to establish and disclose their criteria for admitting virtual assets for trading. If a platform operator receives payments for admitting virtual assets to trade, its fee structure must avoid any actual, potential, or perceived conflict of interest, for example, by imposing a flat rate for all virtual asset issuers. (5) Insurance. Another potential difficulty for platform operators may be fulfilling the requirement to take out insurance against theft or hacking. 6. Market manipulation and abuse. Platform operators will be made responsible for preventing market manipulation and abuse. 7. Public disclosure. Licensed platform operators would be required to make public information as to their fees and charges, the trading rules governing their platform operations, and their criteria for admitting virtual assets to trading. (8) Ongoing reporting obligations. Potential ongoing reporting obligations will include requirements to report to the SFC details of new virtual assets to be admitted to trading on the platform, and the identities and locations of its clients at month end. 9. Other requirements. Other, less onerous obligations include implementing written policies and procedures governing employees' dealings in virtual assets, prioritizing clients' orders over orders for the platform operator's account, accounts in which it is interested, or the accounts of its employees, or agents, and holding clients' money and virtual assets in a segregated account. While platform operators are operating in the sandbox, the SFC may further consider or refine its regulatory and supervisory approach through discussions with them. Licensing conditions and terms and conditions imposed will be made public. The SFC may also issue further guidance, depending on developments in virtual asset-related activities. Further lectures cover the current Hong Kong regulatory framework for virtual assets.